Hey guys, this is in response to a question I had. A guy asked me, what's it like in the chat room? Well, here's what it's like in the chat room. Sometimes it's dead in there and sometimes it's active. Today it was active, or not today, it was on Friday, I think it was. And here's what happened. I'm just going to read you the blog that I'm getting ready to put out. Let's start from the very beginning. This morning, I wasn't planning on taking any trades at all until a signal popped up in the chat. Ding! A signal fired off, but I was busy at the time, and about 3 hours later, I checked the signal, and there was a pullback, so I thought, I would jump right in. The probabilities were all looking good. Nobody knew this. Nobody knew because I wasn't talking about it at the time. I didn't announce it or anything, so there was nobody in there. So here's the chat. The signal that just came out, well, let's look at it. I'm going to tally up some stats for you guys. Hang on a second. And then we get into some chatting here. Martin says, cool. Ryan says, I just bought a contract for $35. Martin says, I got the one above earlier for $45. And we chat, and you can read it. Okay, so at this point, Martin and I are in the trade. We both waited for a pullback, and I assume that we're thinking the same thing because he bought it before I did, even before I mentioned anything. LOL. Now Martin bought it for 45, not 5. That needs to be 45. Sorry, 45. And I picked it up for about 36. So since I didn't talk about it and he bought it before I even mentioned anything, we're kind of on the same page. And we go on down. We talk some more about the trade. It expires in the money 85% of the time. Let's see. Now here I explain why I put in a take profit. I put in a take profit on that trade. Anyways, so we know that the strike we entered expired profitable 85% of the time. But how? I mean, with the probability tool suite. So I decided to take profits for a quick scalp instead of holding it. The probability tool suite is this little colorful thing right here. Now, another reason that I wanted to take that particular trade was because I was looking at another thing. The Euro USD had just fallen for 6 consecutive bars. This is what we call a bar run. Now, the probability that the very next bar or the very next hour would close above that was 54%. It closed above more often than it closed below. So right off the bat, we knew we didn't want to sell it. We knew we only wanted to buy because it closed profitable more often. So that's another confirmation that we wanted to take that trade. And you can read about that right here. Now here is another confirmation of why I wanted to take the trade, because I drew a trend line. You see the trend line here from the top all the way down to the bottom. I drew a trend line and price was sitting right there and I was waiting for a pop. Now Jason stuck his nose in. What pair is this, Ryan? Because I have a feeling he traded the hourly. And then I told him about that. And right here where it says waiting for the pop, waiting for a pop means that I was waiting for price to burst really quickly, like a rolled up spring popping, price rolls up, and then kerpow, it pops up. Okay, now at this point I was getting a little irritated. Price rose just enough to give me just a little bit of profit, really close to my take profit, but not close enough. And I was like, come on. And so I hang on to it. And then finally, like just a minute later, chink, took my profit order. Got in at 36, got out at 50 for a little scalp there. And here we talk about something looked up. The probability of it touching this level is 75%. So I didn't know. I knew that it had done that in the past. In the past, 75% of the time it would go up and it would touch a level 75% of the time, but it wouldn't necessarily go all the way back up above the open. So I knew that when it touched this level, that it went back up 75% of the time, enough for me to take profit. However, whenever I looked at the other parameters, every time it touched this level, the percentage of time that it rose back up and closed above the ATM line was less than 50% of the time, so I didn't want to hold it. That's why I was taking profit. And I think I just skipped ahead of myself because that's what Dylan was asking here. And then we go on to explain that. Okay, it only closes back above the original ATM line right here 25% of the time. It only expires back up there 25% of the time, so why would I want to hold it? I don't want to hold it. I want to take profit on it. And, you know, I was trying to encourage Dylan to stay out of the trade. If he was in it, stay in it, but if he was out, don't get in it because it's not a good trade, you know. Now, I mean, look, how would you know that if price fell here, that it only rose here before here 25% of the time? How would you know that without the tool suite? You don't. And everything we do is derived right from the tool suite. So anyhow, we go on and we discuss some more. I'll put in a video here, and there you have it. That's what it looks like. That's our chat room, and that's what it looked like live the other day. All right. Why don't you go ahead and go to your dashboard? If you're watching this on YouTube, it's going to be in the comments below, and if you are watching this in anywhere else, you should already have your dashboard. All right. Thanks, guys. Bye-bye.